Sometimes it's not what a company says, it's what it doesn't say. Shell wooed investors with a presentation to the street, to big institutional holders, and held it in New York. And the message was considered to be, we are interested in achieving the same valuation as giant US energy companies. So they had a presentation. It mentioned net zero once. The company indicated it's going to focus on oil and gas, and the implication was that there's going to be less emphasis on renewable energy and cutting emissions. We're joined now by Paul Cheng, Managing Director and Global Equity Research Analyst at Scotiabank. Paul, leaving out the net zero stuff for now, this is among your, I think this is your favorite integrated oil stock. Can you tell us why?
Hi, Andy. Good morning, and thank you for having me. Yes, this is our top pick. We believe this represents one of the best way of change story over the next 2 to 3 years. The action that taken by Wael Sawan, I think that is going to transform the company. He is inserting a sense of urgency and the need to earn the right of to invest across the company, and I think that's very positive.
You use this expression, right to invest. So does that mean that each division of Shell, be it oil, gas, renewable, they all have to justify being given capital?
Absolutely. It's actually not just by the division, but also on project level. So they are currently going through the review, asset by asset. There will be no sacred cow. If the asset could not generate a reasonable return and do not see a path to do so, they will be either divest or shut down. So for instance, they have put their Singapore chemical and refining complex up for review, and if they could not find a way that to improve that operation, they probably will try to sell it. And also that they just announced they will sell their share in the Shell Pakistan. So that's just some example.
This is interesting. I did not know this, that apparently Shell had said post-2025 they would not go ahead. They had said this with new project developments in oil and gas or LNG, but they've now dropped that provision. They may go ahead with major investments after 2025?
That's correct. I mean, from their standpoint, that I think the new CEO is a strong believer end up that the oil demand is probably going to last longer than people expected. And so from that standpoint, as a company or as an industry, it will be irresponsible for them to drop their investment and driving the production lower while that the demand is still rising. So I think we need to be realistic. We need to go with where that the world is going. If the world demand is still going and we cut the production, look at what happened to Europe last year. That's not going to be beneficiary to anyone.
I like this line in your report. They are pulling back, as you indicated, on some businesses. They're exiting power projects in Ireland and France. But I like this phrase you have. They want to own at least some green electrons to get insight into how the energy market is trading.
Absolutely. I mean, think about it. This is still an emerging market. And so in some way that they are still obscure in the pricing, in the market condition. So if you don't actually own some equity, you may not even know that whether you price it right or not.
That's interesting. We were looking at a scorecard before the show. And it's interesting, over 10 years, BP and Shell, pretty similar stock price performance. But of course, Exxon has been a darling lately. Why has Exxon outperformed so much lately?
To be quite frank, Exxon went through their tough spot. So if you look at before 2020 or before 2021, frankly, that the company has been spending too much money, and they get caught while they were spending beyond their cash flow, so they are building debt, and then you get hit by the pandemic. So the stock dropped significantly in the early part of 2020. So we are talking about from a low base, but since then that the company have cut back. They also helped by the meaningful rise particularly in the refining market. Keep in mind that Exxon today is the largest refining complex among all their peers, and so that they earn a lot of money. So it's really a matter of the execution. And of course that Exxon also benefit with the really attractive position in Guyana. That is probably the best project we have seen over the past 2 decades.
Yeah, there's going to be massive growth still ahead, apparently, in Guyana. That's right.
I mean, we have growth from Guyana at least for the next decade.
Whoa. And yeah, growth can be hard to come by. Just to go back to your thesis on Shell, you call it the best rate of change story. In other words, you see the new CEO pushing through change and improvement from an investor point of view at a faster pace than rivals?
Yes. I mean, if you're looking at what the new CEO is trying to do, he's trying to insert a sense of urgency throughout the entire organization, and become very smart and to, in a sense, that cut back in the CapEx, force the high grade in the portfolio. Because let's face it, every single manager will come to you and say, oh, I have this list of great investment. But the truth though is that they can't be all that great. And even if they are all great, some is better than the other. So when you constrain the capital and they don't get all the money they want, they have no choice to prioritize. And when they prioritize that, the outcome is that you have better result and better return projects that you're going to pursue. Now, the other thing is that what they are doing, to some degree, simply put, is back to basic. In the end, is that you want to mobilize the entire organization to aim for better and faster decision and execution. And if you can do that, that is going to be tremendous. I mean, you're talking about billions of dollars of improvement.